Tax Act, actually almost all the deduction has been removed from the act. The only incentives which is there is 80JJAA. Of course, there are some incentives which is applicable for the specific assessors, but this is the only incentives which is applicable to almost all assessors. So the way in which we will discuss this session is that we will have a light introduction about this subject, why we need to read this or why we need to attend this session. Second, we will have a glance through of this section 80JJAA of the Act. See, actually, if you see, this section is as only 3 subsection and around 4 proviso and 2 explanation. But is actually, it may be look simple, but actually it's complicated. So that is the way in which I see this section. And as Meenakshi ma'am said, we will deep dive into the subject. We will do analysis each and every wording of the language of the section in the second part. So this is the same sum and substance. This is the only weighted deduction available to all the tax assessors who satisfies prescribed condition. And this deduction is applicable to all the taxpayer following new regime or continuing under old regime. This is a special deduction which is available over and above the normal deduction of salaries and wages under the 8 PGBP. So as we know that under section 37, you will claim as a deduction, and apart from that, you can claim certain deduction, the salaries or wages paid to the additional employees. And so the glimpse of the deduction is that, so if a taxpayer hired an accountant with a salary of 2,50,000 per month per annum, the taxpayer will get a cash back due to additional deduction under 80JJAA is around 56,633, which means around 23% of the salary will be taken as a cash back because of this provision. So this is the glimpse of this deduction. So let us have a glance through of this section. So if you see the subsection 1, subsection 1 reads as follows: where the gross total income of an assessee to whom section 44AB applies includes any profit and gains derived from a business, they shall, subject to the conditions specified in subsection 2, be allowed a deduction of an amount equal to 30% of the additional employee cost incurred in the course of such business in the previous year for 3 assessment year, including the assessment year relevant to the previous year in which such employment is provided. So as we read, this is applicable to all the tax audit assessees. And what is the quantum of deduction? Quantum of deduction is the 30% of the additional employee cost. So you will get on first year 30%, second year 30%, and third year 30%. Put together 90% you will get as a deduction. Is there any condition to be satisfied? Yes. So how many years deduction is allowable? It will be allowable for 3 years. Say for example, if you employ this year for the financial year 22-23, you will get the deduction for this year 22-23 30%, 23-24 30%, and 24-25 30%. So totally 90% you will be eligible for a deduction. So then what subsection 2 says, as mentioned earlier, this is the subsection 2 says that of course this is the condition which the taxpayer has to be fulfilled in order to claim deduction under subsection 1. So subsection 2 reads as follows: no deduction under subsection 1 shall be allowed if a business is formed by splitting up or the reconstruction of existing business, provided that nothing contained in this class shall apply in respect of business which is formed as a result of re-establishment, reconstruction, or revival by the assessee of the business in the circumstances and within the period specified under section 33B. If the business is acquired by the assessee by way of transfer from any other person or as a result of any business or reorganization. So if the business is formed by splitting up or by way of acquisition, you will not be eligible for a deduction. That's what they are saying. So unless the assessee furnishes the report of an accountant as defined under explanation, accountant before the specified date as referred under section 44AB, giving particulars in the report as may be prescribed. So there's a form which is prescribed. The form is form 10DA, which has to be filed before the due date of filing tax audit report. So only if you satisfy this condition, you will be eligible for deduction. So I written here. So as discussed here, there should be there are two formative condition which the business should not be formed by splitting up of a reconstruction of an existing business, and the second, it should not be formed by way of transfer from any other person or as a result of a business reorganization. And other general condition is that the form 10D has to be filed before the due date of filing. So under subsection 3, there are 3 explanation, and under explanation 1, there are 2 provisos. Let us read this explanation 1, what it says. For the purpose of this section, additional employee cost means total emoluments paid or payable to additional employees employed during the previous year. So if you see the subsection 1, 30% of the additional employee cost will be allowed as a deduction. So what is the additional employee cost? This is defined in the explanation 1. So what it says, the emoluments paid or payable to the additional employee. However, there is a provision which is placed below the explanation, which says that provided that in case of existing business, the additional employee cost shall be nil if there is no increase in the number of employees from the total number of employees employed as on the last date of previous year. Which means if you compare the opening balance, there is no increase, then no deduction is allowable under this section. This is what this is. And the second is that emoluments are paid otherwise than by an account payee check or an account payee bank draft, or by use of electronic clearing system through a bank account or through such other electronic mode as may be prescribed. As we know that there are some certain prescribed mode through which the payment has been made, which means if you pay through a cash, it will not be allowable as a deduction. There is second provision which is placed before the explanation 2, provided further that in the first year of a new business, emoluments paid or payable to employees employed during the previous year shall be deemed to be an additional employee cost. So there is no much restriction to the new business as such. So I written same thing. So whatever the emoluments which is paid or payable to an additional employee will be allowed as a deduction. And in case of existing business, so there should not be an increase. I mean, the additional employee cost will be a nil if there is no increase in employees, or if it is paid to a cash or not through a prescribed mode. So in case of new business, whatever the amount which is paid to an employee will be allowed as a deduction. Now we'll go to the explanation 2. And so actually, in the explanation, there is a 3 explanation which I said. One explanation 1 which I read, and we'll go to the explanation 2. See, if you see subsection 1, 30% of the additional employee cost will be allowed as a deduction. So in explanation 1, we understand that the emoluments which is paid to an additional employee will be considered as an additional employee cost. So who is the additional employee? That is defined in explanation 2. Additional employee means an employee who has been employed during the previous year and whose employment has the effect of increasing the total number of employees employed by the employer as on the last date of preceding year, but does not include an employee whose total emoluments are more than 25,000 per month, or an employee for whom entire contribution is paid by the government, or an employee employed for a period less than 240 days during the previous year, or an employee who does not participate in recognized provident fund. These are the employees will not be considered as an additional employee. There is 2 provisions placed before explanation 2, which says that provided that in case of assessee who is engaged in the business of manufacturing of apparel or a footwear or leather products, the provision of subsection C shall have effect as if the word 240 days, the word 150 days has been substituted. So the apparel manufacturing company or leather manufacturing company, for them 240 days condition is not applicable. For them 150 days condition is applicable. There is a second provision which is placed before the explanation too. So this is brought out by the Finance Act 2018. What is provided further that where an employee is employed during the previous year for a period of less than 240 days or 150 days as the case may be, but is employed for the period of 240 days or 150 days as the case may be in the immediately succeeding year, he shall be deemed to have been employed in the succeeding year, and the provision of this section shall apply accordingly. So here what it says that, see, the one of the condition is that you have to fulfill the 240 days condition by any chance. Say those employees who are employed after 4th August, possibly they will not be able to complete 240 days. In that case, in the subsequent year, if they fulfill this 240 days employment, then he will be deemed to be employee of that in the succeeding year. So I written the same. So he should be employed during the year, and the employment has the effect of increasing the total number of employees as compared to last preceding years, and the emolument should be less than or equal to 25,000, and he should be participated in the recognized provident fund, and not entire contribution should be paid by the government. If suppose entire contribution is paid by the government, then those additional employee costs will not be eligible for a deduction, and he should be employed for 240 days or more in the concerned year. And what are the exceptions which we already discussed. Now we'll go to the explanation 3. As we said that if you see in the subsection 1, 30% of additional employee cost will be allowed as a deduction. In the what is additional employee cost, that is defined in the explanation 1, which says that emoluments paid to an additional employee, and explanation 2 define who is an additional employee, and the third explanation 3 defines what is the emoluments. Emolument means any sum paid or payable to an employer in lieu of his employment by whatever name called, but does not include any contribution paid or payable by the employer to any pension fund or provident fund or any other fund for the benefit of the employee under any law for the time being in force, and any lump sum paid or payable to an employee at the time of termination of his service or superannuation or voluntary retirement, such as gratuity, severance pay, leave encashment, voluntary retrenchment benefit, commutation of pension, and the like. So all the retirement benefits will not be allowed as a or considered as an emolument, and whatever the contribution made by the employer to those funds will not be allowed as a deduction or will not be considered as an emoluments. Now there is subsection 3. This actually it's a transition provision. Of course, we are not much to deal as of now. Anyway, I will read this one. The provision of this subsection, as they stood immediately prior to the amendment by the Finance Act 2016, shall apply to an assessee eligible to claim any deduction for any assessment year commencing on or before 1st April 2016. So this is applicable to those business assessee who is eligible to claim deduction in the earlier years, and he will be, he will be covered under the old provision of this act. So anyway, we'll of course there are a lot of complexities even in this. Anyway, this is, since it is not much applicable now, let us move further. So whatever we discuss, I put in the format. See, I use the word tentative format. Actually, this is a not final format. This will vary depending upon what are the tax position which you will adopt. So just for have an overview of this section, I have put this table. Say consider for this year we are claiming or computing deduction under 80JJAA. So I am taking the breakup of the employees for the financial year 2021. 2021 means the preceding year. What is number of employees as on 31st March 2020? I will take that number. Then the addition during the year 2021 on or before 4th August 2020, I will take that number. And the addition during the year 2020-21 after 4th August, I will take that number. This addition put together, I will add, and this is the total addition during the year. And out of which the number of resignees I will deduct. Then I will get the total number of employees as on 31st March 2021. So could you understand this table? Just an opening balance, addition, deduction, and closing number of employees. This is the format. Can I move to next slide? Anyone please respond? Could you respond?
Yes, sir.
Yes, sir. You can proceed.
Okay. So now, similar way, I will put the table in for financial year 21-22. Same, the closing balance I will take as an opening balance, and addition during the year 21-22, I will take that number on or before 4th August. And after 4th August, what are the number I will put here, and this total addition. Then out of which the total resignees during the year I will deduct, and I will get the closing number of employees as on 31st March 2022. So if you compare total number of, closing employees and opening employees, if it is a positive, which means there is an net addition, you will be eligible for deduction. Now, can you see the proviso 1 to explanation 1?
No.
Class A, can you read this one? There is no, see, provided that in case of existing business, the additional employee cost shall be nil if there is no increase in the number of employees from the total number of employees employed as on the last year of preceding year. Since there is net addition is positive, so I will be eligible for deduction. So here, what I will do is that I will take two things out of B1. Where it's out of B1 here, the addition made during the financial year 2021 after August 4th August 2020. I will take that list. I will apply the condition. What are the condition? All this condition. So the employee should not have been resigned on or before 31st March 2022. I will take that list. From that, I will refine that those emoluments to whom I have paid more than 25,000, I will take that those employee out of the list. Then if those employee who was not participated in the RPF, I will remove from the list. And suppose if the contribution is of the provident fund is paid by the government, those employee I will remove from the list. And if it is the emoluments is paid in the cash, even those employees I will remove them from the list. So which means effectively, if he satisfies all these conditions, only those employee to whom the emoluments has been paid will be eligible for deduction. Similarly, so this why we are applying, because of also 2 to explanation 2. If you see the proviso 2, provided further that where the employee is employed during the previous year for the period less than 240 days or 150 days, as the case may be, but is employed for a period of 240 days or 150 days, as the case may be, in the immediately succeeding year, he shall be deemed to have been employed in the succeeding year, and the provision of this section shall apply accordingly. So why I am taking this list? Even though he is employed in 2021, since the 240 days criteria or condition is fulfilled in the 21-22, so for those employees, what are the emoluments is paid will be allowable for a deduction. Similarly, those employees who has been employed during financial year 21 and 22 and has completed 240 days and also they satisfied this condition will also be the emolument paid to those people also will be considered for the deduction. So this is the A2. A2 is the addition made during 21-22. Actually, there is a disturbance. Ma'am, can you mute?
Yeah.
So the addition is made during the financial year 2021-22 before 4th August. Then for those employee and also satisfying those conditions, the emolument paid to them, I will aggregate it. I will apply 30%. Then that amount will be eligible for deduction. If somebody has any doubt, please ask me, because this understanding is necessary before we are deep diving into the provisions. At least the basic understanding. Of course, there may be interpretation issues, but apart from this basic structure, if you understand, then we'll go further. Any question?
Venkat sir, you have unmuted. You want to ask something? I think we can go. It's clear only, Sathish.
So now we'll go to the part 2 of our discussion. Could you see the slide?
Yes, sir. Yes, sir.
Okay. So actually, the problem of this section is that one, this is the incentive section. Second, there is no much precedence available under this section. So this is the issue. And the third, if you see this provision or if you read this section as such, there is a lot of ambiguity. So this is the problem. So you don't have the precedence. There is also an ambiguity. So that's the problem. So that makes more complex. See, if you see income tax or GST or even Customs Act, there are many exemption provisions. How to read it? Any idea? See, I can't read like charging section exemption provision. There may be some difference, some leeway will be there. What is that? So we have read this interpretation of statutes, right? There are literal interpretation, purposive interpretation, harmonious construction, liberal construction. There are many things. So as we discussed earlier, I think in the borrowing cost when I took the session of borrowing cost. So our state functionaries are classified into three things. One, parliament. Two, executive. Three, judiciary. So generally, parliament will draft the law. Executive will implement law. Judiciary will interpret the law. This is the general function, right? So the act has been drafted. Now the ball is at the court. How to interpret it? This is the question. So there are various things one has to take into account for interpreting the section. One, the language of the section. Second, there are other act, which is, say, for example, if you go to Central Act, there is a General Classes Act. If it is a state legislative, there is Tamil Nadu State Legislative, General Class Act. Apart from that, there is a constitution. Apart from that, there are something an interpretation of statutes, which is part of the common law, which is nothing but the interpretation or a proportion which is developed by the judgment by the court in various issues. All will form part of the all those things has to be taken into an account for the purpose of for interpreting the section. See, as far as exemption section or incentive provision as such, there are various proportion. Is given in the various judgment. So one of the proportion is that there should be a strict interpretation of the exemption provision. Why? Because, see, there is something called a charging section. Charging section which define the scope of, taxability of the particular act. The charging section has to be interpreted very strictly. So if that be the case, the conversely, even the exemption provision should also be interpreted strictly. Meaning thereby, in the charging section, of course, this comes from the Article 265 of the Indian Constitution, which one has to actually do in-depth study of that, why they are doing a strict interpretation as such. See, in the charging section, you somewhere bringing in the cluster of those people who will be subject to tax. At the same time, on the other side, while you relieving some people or giving some incentives or some exemption, you also strictly interpret the section, which means if that person is not fall under the language of that section, he will not be eligible for a deduction. So this is the one of the proportion given by, of course, it's a various judgment throws this point. So one of the judgment is Kanai Lal Sir versus Padmini Sudhakan case, and also Ansaraj Govind Dasan versus H.S. Devi also throws same point. So actually many judgments are there. So here you have to do a strict interpretation. Actually, generally, there is generally this strict interpretation or literal interpretation use a substitute of same things or consider as the same thing, but there is a slight difference. See, in the literal interpretation, what we'll give a narrow meaning or a grammatical meaning. We will not do any information. We will not go apart from what it has been said. But in the strict interpretation, we will also consider the apparent legislative intent. So there is a slight difference of this interpretation. Actually, we'll deal this with the when we read this, when we apply this section. So please see that strict interpretation with the literal rule would result in ignoring an important aspect, that is apparent legislative intent. The strict interpretation can be implied to accept some form of essential inferences which the literal rule may not accept. Actually, you may read the judgment of Dilip Kumar case. This is a customs case, 5-judge judgment ruling, which is written by Mr. N.V. Ramana. So, who was retired yesterday. It's a beautiful judgment where he has plotted out what is the difference between the strict interpretation and literal interpretation. So one has to resort to a strict interpretation in case of exemption provision. While interpreting the exemption provision, this is the one of the proportion. The second proportion is that if there is an ambiguity or if there is a two interpretation comes from reading the section, then how I had to consider in case of charging consideration, the benefit should be given to them in the favor of taxpayer. In case of exemption provision, the benefit should be given in favor of revenue. So one is to the department and one is to the taxpayer. there is a third proposition which is coming from the various judgment. See, if the section is drafted in such a way in order to promote economic growth, then that provision has to be interpreted liberally. So one of the case law is the Bajaj Tempo Limited versus Commissioner of Income Tax, which says that, I'm reading the judgment. Since a provision is intended for promoting economic growth has to be interpreted liberally, the restriction on it too has to be construed as so as to advance the objectives of the section and not to frustrate it. There are various other judgments also. An exemption notification is to be construed reasonably and rationally and not in the manner which deprives benefit thereof. The incentive provision has to be construed purposefully, broadly, and liberally. General rule is a strict interpretation of exemption, while special rule is in case of beneficial or promotion exemption is a liberal interpretation. This is the third proposition which comes from the various judgments. Supreme Court, all Supreme Court judgment. So there are other proposition which says that same provision, one part you have to interpret very strictly, the other part we have to interpret liberally. The famous case law is, I think this is a 7-bench judgment case, Woodpaper Limited versus case, where it has been said that, truly speaking, liberal and strict construction of an exemption provision ought to be invoked at different stages of interpreting it. When the question is whether the subject falls in the notification or in an exemption class, then it is being in nature of exception is to be construed strictly and against the subject. But once the ambiguity or doubt about the applicability is lifted and the subject falls in the notification, then full play should be given to it, and it calls for a wider and a liberal interpretation. So this is the fourth proposition which comes from this judgment. There are also many case laws on this aspect. So having this said above, all this proposition which we have discussed is not directly linked to 80WJWA deduction, but there is one case law from the Bangalore High Court judgment where gives some proposition. Now this case is pending before Supreme Court. This is also more important. See, if we see this case law, it says the section has to be interpreted liberally. If you see the last para, of course, you can read the entire para. Both the para will be useful. A benevolent provision has to be read liberally and reasonably, and if there is an ambiguity, it should be in the favor of assessor. So Karnataka High Court decision says that it should be in the favor of assessee. So of course, this is pending before the Supreme Court. So this is directly linked to 80WJWA deduction. So having read this proposition, let us know the history of this section. So one may ask why I need to know the history of the section. If you know, there are questions which can be interpreted based on how this has been derived. So for which one should understand the history of that concerned section. So actually 80WJWA deduction was inserted by the Finance Act 1998. So the objective of the insertion of section 80WJWA is to generate more employment opportunities. Actually, this is the form of special deduction over and above the normal deduction, which is allowable under the PGBP. Same, the 30% of the additional wage paid to new workmen will be allowed as a deduction for the period of 3 years. And there is a condition of minimum 100 workers have to be employed. And in case of existing undertaking, there should be at least 10% increase in the existing number of workmen. So these are all the conditions actually removed now. But let us know this also. Workmen shall be in employment of at least 300 days during the year. So There 300 days, now it has been reduced to 240. This section was allowed only to an Indian company which has profit and gains earned from the industrial undertaking. Then in the year 2015, they have refined the scope. Actually, if you see the earlier section, it was made applicable to an industrial undertaking. So which is nothing but the factory, but it has been noticed that it was made applicable to even the other sector also, or unauthorizedly people are claiming the deduction. So what they have done is that they removed the word industrial undertaking and replaced by the word factory in the year 2015. Then what they have done, I think this is in the 2013, I think, then below is the 2015. They have expanded the scope. Earlier, it was applicable to the Indian company. Then it was made applicable to all the companies who has the manufacturing unit, which means factory. And they have reduced the workmen from 100 to 50. Then in the Finance Act 2016, which is the present form of the act, they have liberalized more. What they have done, so this is the budget speech where it has been stated that it has broadened and liberalized the scope of employment generation incentives available under 80JJAA, which means earlier, which was applicable to the manufacturing sector, it was made applicable to the all sector. And which we already discussed, 300 days they are reduced to 240 days. They are made applicable to all the assessee who are subject to tax audit. And there is actually they have placed a restriction on emoluments, which means that 25,000 per month, and there is no condition, incremental condition like earlier. Now, then after in the Finance Act 2008, in the Finance Act 2018-19, they have inserted proviso 2 to actually explanation 2. Actually, it's an explanation 2 where this 240 days condition has been made applicable to succeeding year also, which means if the person was not completed 240 days, but he is completed 240 days in the succeeding year, he will be deemed to be an employment of that year. They made some relaxation in this. Now we will go for the practical studies. So the way in which I structure this a discussion is that I will explain the question. You need to answer. So actually, I highlighted in the color. The reason being is that you can somewhere, it will help you to interpret the section. Say, for example, this subsection, question number 1 is in blue color. Somewhere it will help you to interpret based on this. Of course, there's a tentative, I highlighted tentatively. Maybe you can also refer the other provision in the act, and also you can give your suggestion or solution. The first question is that whether deduction is applicable to 44AD case where the taxpayer offers income on deemed basis. Input in other ways that if the taxpayer's turnover exceeds 1 crore but does not exceed 2 crores, and where the cash receipt and payments exceeds 5% of the total receipts or a payment, whether for these people whether this section applies. Section 80JJAA applies. See, even the second question also is chargeable, is come under a 44AD case. Is offering income under 44AD case. Whether he will be eligible for availing deduction under 80JJAA. Please respond.
Satish, as for me, first question is not applicable.
It's the same, sir. First and second is the same.
Yeah. Okay. Exceeds crore, but does not. So the here if it's covered under section 44AB, then only this section is applicable.
Yes.
Suppose if not covered under 44AB, so absolutely this 80JJAA is not applicable.
Correct, sir. So even if you
Okay.
go to section 44 AD, which defines the eligible assessee, one of the condition to be as an eligible assessee, you should not claim deduction under chapter 6. I mean chapter 6A heading C, which is the where this 80JJAA falls. So earns, as you said, it's those 44 AD case will not be eligible to claim deduction under 80JAA. Any other thoughts?
That's
Let's
clear. That is clear. Yeah.
let's move to other question.
Yeah.
So whether the deduction is applicable to the taxpayer whose total turnover is less than 2 crores but offers income less than deemed income, I mean 6% or 8%, but more than the maximum amount not chargeable to tax by getting the books of accounts audited by the taxpayer, I mean chartered accountant, which means he offered income less than 6% or 8%, whether for them 80JAA deduction is allowable. See, I have sent you this bar provision in the group. Maybe just download it. It will be helpful for you to, at least to refer this consent phrase. Of course, as I said, it's a tentative thing. Maybe you can also refer other things also for your interpretation. Anyhow, this is actually it's nothing too much to do with this. I mean, is it? I mean, first subsection 1, the starting place is there. Question is that whether it will be covered under 44 AB or not. So for 44 AD AB SSC, it's applicable. Whether it will be covered under 44 AB.
It should be applicable, right? Anyway, we are going to give a report under 44 AB only.
Yes. These SSC is included in 44 AP. I mean, if you read go to the section.
So the section should be applicable for them.
Yeah,
it should be available to them.
Yeah. Anyhow, I mentioned here this one. What are the technical stuff? Now we'll go to the third question. Where the assessee has earned income on eligible business, say business 1, but fully adjusted against the loss of ineligible business, say business 2, or vice versa, whether such taxpayer is eligible for deduction under section 80JAA of that, provided that there is a positive gross total income which is earned from other sources. First of all, why this question arises? First, you understand this one. If we go to section subsection 1, what it says, where the gross total income of the assessee to whom section 44 AB applies includes any profit and gains derived from the business, which means, say for example, in our case, business 1, the loss is all. I mean, the income is already set off against this. I mean, loss arising from business 2. Effectively, we see that there is no profit and gains which is included in the gross total income. Whether you will be eligible for deduction. So adding further to this question, one has to read section 80A2. 80A2 or 80A2, I think. Yes. The aggregate amount of deduction under this chapter in any case shall not exceed gross total income of the assessee. And also, you have to read section 80AB, where any deduction is required to be made or allowed under any section included in the chapter heading C in respect of any income of the nature specified in that section, which is included in gross total income of the assessee, then notwithstanding anything contained in that section, for the purpose of computing deduction under that deduction, the amount of income of that nature as computed in accordance with the provision of this act shall alone be deemed to be an amount of income of the nature which is derived or received by the assessee and which is included in the gross total income. Could you understand this?
No, give us some time. Let's read it.
Need time.
Yeah.
Sorry. See, first of all, this subsection 80AB applies or not itself is a question, because this section 80AB will apply only if you suppose if you there is an undertaking. Say for example, it is covered under section 80A, I mean 80 I or IB, where you will be eligible to claim a deduction of profit of that undertaking. But if you this section 80WJWA is not a profit based or profit linked deduction. This is an expenditure linked deduction. Accordingly, this section 80AB should not apply. Now read the section.
Deduction in respect of certain income.
Certain income in respect of any income in the nature specified in
It
that
is not
section.
income.
This is an expenditure. So effectively, section 80AB does not apply in this case. So now the question is that, so of course in this question there is a gross total income is positive, right? So to apply 80A2, there should be a you cannot claim the deduction under this chapter 6 more than that your gross total income. Anyway, that condition has been satisfied. Now the question is that whether the assessee who has earned the income from the eligible business. Why I'm saying they are eligible business? Say, let us give that clarity. See, I have two business. In the business one, I have satisfied this condition. Say, for example, the proviso 1, which says that there should be a net addition. I satisfied that condition, so I am eligible. But in the business, no, I am not satisfied that condition because there is no additional employment as such, right? But the thing is that I earned a loss in business too. It's already been adjusted. Whether I will be eligible for deduction. Oh, I think you understand the controversy, right?
Yes.
Sir, any thought or shall I move to the answer?
Okay. After offsetting.
Sir, I will tell you the answer.
Loss, the result is loss.
Wait. I will tell you the answer. The answer is both yes and no. The thing is simply you have to give the argument. You apply your professional judgment and take whichever view is better for you. So almost all the questions which I framed here, I will give both view 1 and view 2. Both yes and no. Let me go to the answer.
Maybe it is like this, I'll just tell whatever I understand. Okay, there is no restriction like you cannot offset your profit or anything. So you are eligible to offset your profit with the loss from other business.
Yes.
Okay, so yes. And then after offsetting, if suppose we get a loss, okay, after offsetting the profit of business 1, the end result, if we are getting a loss, then from our normal understanding, we always interpret like the profit, it includes loss also, right?
One point I taken. Yes, I took the.
Yes.
Yes.
So it means that this gross total includes the profit from such business. That condition will also be satisfied.
The point taken.
So in that way, then 80JJAA is applicable.
Yes, taken. Any other thoughts? Let's move to the answer. So as I said, 80JJAA deduction is an expenditure-based deduction and not an income-based deduction. And hence, I think 80AB has no relevance. On conjoint reading of section 80JJAA1 read with section 80A2, it is ample clear that the gross total income should be passed through before claiming deduction under section 80JJAA deduction. So as we said that 80A2 says that the aggregate amount of deduction under this chapter shall not in any case exceed gross total income, which in any case we have, we have the positive income. Third, so now and that interpretation which we discussed, just I'm using this. The intention of the parliament is to generate the employment opportunity. If you see that budget speech or whatever may be, the purpose of this provision is that to generate the employment opportunities, to observe additional workforce. The incentive provision should be interpreted liberally, and any restriction contained therein should be interpreted in a manner which advances the object of the provision and does not frustrate it. So you have to interpret the section liberally, not like what it has been said. As you said that the term profit includes loss, which is in the form of reduced gross total income. So this is in the context of actually 32 in the business, right? One may also use this case law for this, for supporting his position. Second, the deduction is not allowable. Why? The incentive provision are to be interpreted strictly. If any condition is placed for availing deduction, then same should be followed strictly. And the intention of the parliament is to provide deduction for those taxpayer who generates employment irrespective of the fact whether he earns profit or not. Then the wording of the section would be here. Here the associate to whom section 44AB applies carrying on any business they shall be. It will be in that way. They would not have used the word profit and gains, all those stuff. So both of you are possible. Of course, as Meenakshi ma'am said, view one is a better view, which I feel so. Maybe you people can apply your professional judgment. Now let us go to the next question. Whether the deduction is allowed qua each business or qua each taxpayer. See, why this question arises? When the taxpayer carries two business, say business one, which attracts limitation as prescribed under subsection 2, which we already discussed. Like for where the business is formed by way of transfer from other business, etc., by splitting up. And the business 2 does not attract any limitation, then whether the additional employee costs incur in business 2 is eligible for deduction. So the question is that if you link to business, you will be eligible for deduction. If you link to the taxpayer, you will not be eligible for deduction. What is your answer? Now, see, if you see that history, it plays a role. We have discussed, right? From 1998. That would help you.
It should be taken for each business only, right? If suppose the profit is included from the, if the profit of that business is included in the gross total income, then I can claim the reduction. The only condition is I have to have a profit from that business.
The question is, see, if you see the subsection 2, right? If you subsection 2, if the any business is formed by splitting of reconstruction or
yeah, but then the other business you are eligible, right?
Okay.
For the first business, you will not be eligible, but for the additional employees in the business 2, we can still claim the incentive.
Yes, one thought is there. Other thought?
I think it should be for assessee only, sir. Because just to take the benefit, the intention of the law is something like just to take this benefit, they should not create dummy businesses and then create an expense. So maybe I think we should go for assessee wise.
Think about the things. Yeah, I have transfer. I acquired the business maybe by way of slum sale, one business. Okay, I am already carrying on some other business. Okay, in the some other business, I made an addition of employee. I newly I recruited the people. Right. If that be the case, I should be allowable for a deduction. Just forget about the business too.
Okay.
Anyhow, I have contributed for economic growth, right, or somewhere.
Okay.
But nowhere the section talks about it is, you cannot claim an incentive, right? It only talks about the business. It never talks about in the angle of taxpayer, right?
Okay. So the green club which I marked both in subsection 1 and subsection 2, just go through that one. Maybe you can get something on that explanation 1 and also in subsection 1. Maybe some thought on this.
You want us to read subsection 1, right?
Subsection 1, maybe. I mean, just I have sent you this bad provision. The group, just go through, which I highlighted in green color. You may get some thought. There won't be any direct answer. I have not framed any question which has a direct answer. So shall we read the section? I mean, what are the intention for introduction of Section 80 WJWA Act is to generate additional employment opportunities. So for the taxpayer increases employment, there is no valid restriction to restrict deduction. Seeing the intent as such. On the literal reading of Section 70, which is about the intersource of adjustment, one can understand that a person can carry 2 or more business. Why I'm saying is that if you see then subsection 1, right, they use the term business.
Business, correct.
Yeah. If that be the case, so the person can carry out 2 or more business. So that business has to be seen individually and not inquired to a taxpayer. Okay. So I written this section 70. Just written the bad provision of this, which means that somewhere we have what are the term the business which is used in the subsection 1, you have to compute as a business wise. Okay. On reading the history of the subsection 80 WJWA along with the budgetary speech and explanatory memorandum, one may understand the deduction is computed in relation to each business. See, if you see that section, that history, first they are made applicable to industrial undertaking, the 2 foreign corporate associates. Then what they have done, industrial undertaking is something the manufacturing in a particular sector. Then they have done. Then they are also made applicable to other associates also, not restricted to corporate associate. Then what they have done, apart from the manufacturing sector, if you are in any other sector, say for a retail sector or whatever, maybe you also be eligible for a deduction, which means if you see, it's like coming as a bit, related to business as such. Maybe it gives some inference that the intention of the government is to give link to a business as such. See, and the intention of the parliament is to compute from the taxpayer's perspective, then the wording of the subsection 1 would be as follows, which means if you see in the subsection 1, how they said 30% of the additional employee cost incurred in the course of such business. They would have used incurred by the such embassy. They could have done it, which means seeing this, one can get the impression that it is linked to the business. Let us see the view 2, which means it is linked to taxpayer's perspective. Why? See, this is a chapter 60 deduction, right? So the deduction is allowable from the gross total income, correct? Correct or not?
Yes.
If that be the case, one may say that it's from the taxpayer's perspective. We have to see accordingly.
No, but the condition in WJW is the gross total
Business.
income should include the profit from such business only. That
Okay, I will come for that. See, if you 44 AB, I mean AB, this turnover, right? Somewhere it may link to this also. Whether tax audit is applicable for the business wise or taxpayer wise?
taxpayer wise.
It also mean if you see where the gross total income of associate to whom section 44 AB applies, one may also take the argument that it is applicable for the taxpayer base. Of course, I given
No,
this
but then
ICS
that would not be a
guideline
good argument, no?
But guidance
Yeah.
code says you should take
into taxpayer's perspective.
Should be in the context of the taxpayer only it tells. I mean, irrespective of the number of activities or undertaking what you have, 1%.
Yes, I agree.
Oh,
So of course, I'm not telling that based on only this argument. No, you have to see the taxpayer's perspective. You want to see a holistic way. So that's the way which I'm saying. So before taking any tax position, one has to read the entire section, if not entire act. On reading certain part of subsection 2, one may understand that deduction shall be computed from taxpayer's perspective. Read the section. If you see subsection 2, unless the assessee furnished a report of an accountant, somewhere one can take an argument this is linked to assessee's perspective or taxpayer's perspective only. And further, even in the explanation 1, additional employee means an employee who has been employed. I mean, if you do see explanation 2, additional employee means employee who has been employed during the year, during the previous year, and whose employment has the effect of increasing the total number of employees employed by the employer. Right? This also gives impression that one has to see the taxpayer's perspective. Correct? And also I given one more argument on adopting view 1. Business perspective, the unscrupulous taxpayer may take advantage of double deduction without creating an employment opportunity, which means he may keep on shuffling to business 1 and business 2 and saying that he will be eligible for deduction on particular business. Could be possibly. Of course, there are also we have other argument also. I have given the later part of my discussion. Yes, there is a possibility. So if you see, one may see on the business wise or other wise. So I believe it's a business wise. It's my personal view. You would take your question. Next question. Whether chartered accountant firm or any other professional firm is eligible for deduction under section 80 WJWA deduction. Answer please.
As long as the firm is subject to tax audit, even the CA firm can claim.
You are claiming, Amma?
Where, sir? There are so many employees.
Any other argument?
He can claim, right?
No, business does not include profession. So you may refer to the Supreme Court decision, GK Chokshi versus Court. Business does not include profession. See, if you see even the heading profits and gains of business or profession. So, see, profession may include vocation, that is defined under the Act, but business does not include profession.
Okay.
So professional firm cannot claim deduction.
Oh, okay. Then it is very straightforward question.
Very straightforward question.
Okay.
Next question. The taxpayer has not claimed deduction for a particular assessment year in respect of emoluments paid in that year. Further, he can claim the balance deduction in subsequent year. Say, for example, the particular employee, I mean, of course, I given the example also. If a taxpayer has recruited an additional employee in the financial year 1920 before COVID-19, and the taxpayer has not claimed deduction in the financial year 1920 or 2021 in respect of additional employee costs, 30% first to 30%, whether such taxpayer can claim deduction in the financial year 21-22 in respect of emoluments paid to an additional employee recruited in the year 1920. See, as I said that as per subsection 1, you will be eligible for,
3 years.
3 years, right?
Okay.
So I forget to claim in the year 1 or maybe in year 2, whether I will be eligible to claim deduction in the year 3.
So first year of claim is required, right? Only if you have first year of claim and if you have formed the CA form 10DA, then in the subsequent years you are eligible to claim.
No, I mean, each year I will be eligible. I mean, I can find the form 10DA, right?
Correct, but without claiming it in the previous year, say I have missed out in the first year, then second and third year I will not be eligible to claim.
Anyway, if you see the form 10DA shared in the group, there is a separate column for preceding year as well as preceding year to the previous year, and immediately preceding to the previous year, and year prior to the immediately preceding previous year.
But the claim will be eligible only if you have filed the form within the due date of filing. Assuming
Correct.
First year means
for the third year, I'm filing before the tax audit due date. So what?
Okay.
1 minute.
Any thoughts?
Just thinking.
Yes, sir, you can only answer.
No, yeah, you can. Go ahead.
Can be claimed. That's my answer, because each assessment year can be seen as a separate unit of assessment. Of course, there are various case law on this aspect. Accordingly, even the deduction is not claimed in the financial year 1920 or 2021. The balance this is a main or somewhat it's complicated question. So let us see whether one has to apply standard deduction approach or year-end-year approach. What it means? Where the employee is during the year 1, this and continues to be in the payroll at the end of that year. In case that employee quit in subsequent year, will the taxpayer is eligible for deduction in the subsequent year, or in other way?
Yes, sir, because the act, the section says that when you're claiming 80JJAA, he should have been employed.
Okay.
So in the subsequent years, see, and in the subsequent years, whatever 30% what we are claiming pertains to the first year of claim.
Okay.
So when that is already allowed, I think second and third year also he should be eligible. It should be standard deduction approach.
Okay. Put it another way, if X limiter recruits Mr. A in the financial year 1920 and his actual salary paid is rupees 20,000 per month in the financial year 1920, in financial year 2021 he is earning 22,500 per month, and the financial year 25,000. Then what is the amount of deduction that can be claimed by X limited under section 80JJAA? If you apply standard deduction approach, then the deduction will become around 2,60,000. If you apply year-on-year approach, then your deduction will come around 2,43,000. So one thought which Deepa ma'am takes, I will taking that point. Any other thoughts? See, answer is simple. There is both approaches possible. I mean, you can interpret the section. Answer is yes or no, both. But the question, what are the arguments which you are giving before? I mean, court of law, it's a skill which I see.
Okay.
We are engaged by the department, then obviously we have to argue on this behalf. Why we need to see pro revenue? I mean, pro assess. Process.
Okay.
See, actually,
there is no mention about this in the section, right?
30%. So, what do you at least tell the answer? Standard approach or year-on-year?
It is still standard deduction approach only, because for the first 20 year only we would have claimed on 20,000 salary.
Okay.
So in the subsequent year 1920, the same for the additional cost what was incurred in the first year, for that only the 3 years benefit is being given. So in the subsequent years also the same 20,000 should apply.
So if that be the case, as a government point, I mean, if you see the first question is, I mean, second thing is puts in the subsequent year, right? So if the intention of the government is such a way that I could have given the deduction 90% the first year itself, why I need to stagger the deduction? If it is a standard deduction approach.
It should be standard only, because I think in subsection 2, if we read, it is saying additional employee cost incurred in the course of such business in the previous year. Okay, so whatever the cost is incurred in the previous year, that should be given for 3 years.
So I'm telling that if say for example in the 2021, right? 80,000 or 22,500 per month.
But that is not the additional employee cost of that year, no?
Incurred in the previous year. Correct.
Yes, argument.
It is not additional employee. Additional employee cost means the employee cost of the new employees that you have.
Okay, what you are telling is that additional employee is the only in the first year you will be deemed to be an additional employee.
Additional employee, right?
Yes, so, I taking this point. Of course, I will not factor that in my PPT. Yes, I'm taking this point.
So it should be definitely be on standard deduction only.
And there is also the case loss. Page Industries, Bangalore IT decision, 2 or 3 case losses there. It says that 80 WJW deduction. So anyway, we'll discuss that case loss.
What does the case law say? It is standard or
standard?
Okay.
See, on literal reading of section 80 WJWA, one can take a view standard deduction is applicable because additional employee costs incurred in the course of such business in the previous year, as you said, right? On section use the expression previous year and not the previous years, and hence once the condition prescribed in, of course, in the previous year it's fulfilled, then it will be allowed for deduction for the 3 years. This is the one thought. Form 10DA supports the portion of the standard deduction. If you see that the form, maybe you can download which I posted in the group. So if you read the form, it's evident that standard deduction approach is applicable. Bangalore IT decision in the case of Page Industries Limited supports this position. If one read the history of this section, one may note earlier there was a 10% increment employment condition which is absent in the current section. The intention being this one, each year the reduction has to be, increment has to be there, then this would not have been removed, at least they could have reduced, right? So which means in the subsequent year I need not be satisfied with that condition as such. Please read opening phrase of explanation 2 carefully.
Explanation.
So additional employee means an employee who has been employed during the year and whose employment has the effect of increasing total number of employees. And employee can be additional employee only in the first year of that entity and not in the subsequent. Anyway, I will capture what are the point you said. So this question, this is the argument which supports that standard deduction approach is applicable. Of course, there are also other view. Their year-on-year direction is applicable. See, as per section 13 of the General Class Act, singular includes plural. Accordingly, previous year includes previous years. Adopting the above view may lead circumventing the provision without advancing the objectives of the section 80 WJW, which means what I said is that the person, recruiter in the year one, he may left in, he may quit in subsequent year, which means still the whatever the amount which I paid allowed as a deduction. So maybe this is against the objectives of the government. Maybe. So holistic reading of section 80 JAA is necessary before taking any position under this section. It could be a first year, second year, or third year. The deduction has to be claimed under section 80 JJWA1. In this context, read opening phrase of subsection 2 and the opening phrase of explanation. So if you see the subsection 2, no deduction under this subsection shall be allowed, which means you have to satisfy this condition. And the second explanation also to say for the purpose of this section, right? Explanation says for the purpose of this section. In the section, you have to satisfy all those conditions. So again, this is seems year-on-year approach is applicable. So additional employee cost means if you see the subsection, explanation 1, right? Provision is placed before. See, if you say that provision based explanation 1 restrict the deduction in case of existing business, there should be at least one new employee to be recruited to claim deduction under 80 WJW deduction. So actually the thing is that under the year-on-year approach, you have to satisfy this condition for all the 3 years in order to claim a deduction, because 80 WJWA deduction, which is allowable under the subsection 1, is subject to condition which you are subject to the condition which the taxpayer has to satisfy under subsection 2. So one has to satisfy all the condition for the every year. Form 10DA cannot override the express provisions provided under the Act. So if you see the Supreme Court judgment, if the form is contrary to the Act, the form cannot override the express section. Adopting view 1 may also counter effect on the other objectives of the government to discourage cash pay transaction. It may provide opportunity for the taxpayer to pay cash in second year or third year and claim deduction based on year 1. So as we know that there are various anti-abusive provision where the government want to discourage the cash. If that be the case, if I'm satisfying, if you say that only in the year 1, I have to satisfy this condition. In the year 2, I will easily violate the provision. I will pay the cash payment. Is that the intention of the government? The deduction will be claimed even though the additional employee leave the organization before 3 years, which may not be the intention of the parliament. And the intention of the parliament is to adopt the standard approach. Then what is the need to split deduction for 3 years? It can straight away said that 90% of additional employee cost would be allowed as a deduction. Having said the above, actually, whatever the argument which you placed holds good as per the Page Industries Limited case. Ma'am, can you read this?
Yeah. You want me to read this facts?
Yeah. It will help you to interpret for other questions.
The eligible employees who had joined in year 1 and 2 and had left the organization in year 3. In the Form 10DE, the auditor had certified deduction in respect of wages paid to qualifying employees of year 3 alone, but the taxpayer claimed deduction in respect of wages paid to eligible employees of year 1 and 2 also in the return of income. The AO disallowed the deduction on the ground that the eligible employees must continue to be in employment in the year in which deduction is claimed, and 30% deduction should be computed with respect to wages paid during the relevant previous year. Okay. So what the decision? Tribunal ruled in favor of taxpayer. The tribunal acknowledged that there was logic in tax authority's view but still ruled in taxpayers' favor on the basis that plain reading supports standard deduction. If there is lacuna in language, the lacuna needs to be filled in by legislature. There is no condition that employee employed in year 1 should continue in employment for all 3 years. Eligibility needs to be tested in year 1 only, and 30% is allowable in subsequent 2 years also.
So standard deduction approach works good. So high level implication for the taxpayer following year on year deduction approach. So the condition need to be checked for all the 3 years of deduction in respect of additional employee employed in the first year. The employee employed in the first year should be continued in the employment for the 3 years in order to claim deduction for all the 3 years. The amount of deduction would vary year on year due to change in the salary amount, cash payment, etc. There should be a robust system in the place for the data management. So all the details should be there in the place. Now let us move to subsection 2. What subsection 2 says that no deduction under subsection 1 shall be allowed if the business is formed by splitting up or reconstruction of an existing business, or if the business is acquired by way of transfer from any other business or as a result of business reorganization. And class C says that the report of the accountant should be filed before, which means the form 10DEA should be filed before the tax due date for filing a tax audit report. Of course, it may not be much applicable for our Sathish case. So I have not factored the answer. Maybe we can discuss high level. We can have a high level discussion. If you convert company into LLP or vice versa, right? Whether the restriction would apply. I'm just changing the structure. See, which means no point of time both exist, company or LLP. So it will be either LLP or the company. Probably it won't apply because there is no transfer as such. It's just a conversion.
Is it
just
not
a legal
business reorganization?
So conversion as such can be taken as a business reorganization or something doubtful. Only you are changing the legal structure as such, right? So see the intention of the government. So I have to generate employment. Whether it's an LLP or company, definitely. I'm satisfying the
but always you cannot look only into the intention, no? But the word specifically says if there is any business reorganization, then you are not eligible to.
So actually, is there whether business is reorganized?
It is there, no? In
just changing the structure.
2B.
Just changing the structure.
Oh, that I don't. You have to explain.
Anyhow,
where should we refer for that?
May not be, but demerger, slump sale, amalgamation, maybe possibly restriction would apply. Share acquisition, still I doubtful. Maybe you can claim the deduction because just because of changing the shareholding pattern or shareholding changed, how my business is affected. So the intention is that, see, if just by a way of some restructuring, I should not, because of which there would be additional, additional employee, just because of that, I should not claim deduction. Because actually, if we see from the government perspective, I am not generating employment as such, additional employment as such. So acquisition of shares or conversion of company most probably may be eligible, rather doubtful. So whether this condition is applicable only in the year of formation or even in subsequent years. Ma'am, demerger, slump sale, amalgamation, possibly deduction may not be available.
Okay.
Because the restriction as based in subsection 2 applies. But conversion of company to LLP or vice versa or acquisition of shares, deduction, you may claim deduction. Possibly.
Acquisition of shares also.
Yeah, possibly. Maybe we have to do deep dive discussion, research on that. But prima facie, yes.
Prima facie, no, but we can take. Then after that, after argument, we can take it to yes.
Maybe.
Right.
So whether this condition is applicable only in the year of formation or even in a subsequent year. So again, this is a debatable view. Yeah, same. One may say only in the year of the formation I will be restricted, because in the subsequent year, if I increase the employment, I create the employment opportunity, why I shouldn't be restricted? So possibly, yes.
Yes.
But if you see the restriction placed by the provision in subsection 2 class A or class B, still doubtful. So both of you are possible actually. Let us go to section, question number 10. Whether Form 10DA need to be filed for the financial year 2021 and 21-22 in respect of additional employee costs incurred by the taxpayer, even though such taxpayer follow standard deduction approach, no additional employee recruited in 2021 and 21-22. See, actually, in the financial year 1920, of course, there is some mistake in my
No, I
question.
understood. 1920, there has been an increase, right? 1920, there is an additional employee cost. Whether should we have to do it for 2021 and 21-22 years?
So whether there is a possibility of claiming deduction if the Form 10DA is not filed within the due date, stating that the same is directive in nature. See, I think if you see, remember in the Hari Prasad case, I think, where, of course, this is not related to 80WJ deduction. In case of incentive provision, somewhere one has to divide the mandatory condition and some is the condition which is of directive nature. So far as if the taxpayer has fulfill the condition, mandatory condition, you will be eligible for deduction. So there is one case law or many case law on that. So what is your answer?
Better to
submit
Form 10.
Better to file it. So Hari Chandra Sri Gopala case actually. So para 32 may refer it. Requirement of filing audit reports under 80WJWA is a directory requirement, and once would stand satisfied if the accountant report is furnished during the course of assessment. So this case law may support this. If it has not been filed, even though there is one judgment from Knitting Industry Private Limited, Supreme Court judgment in the context of 80IP. Even though necessary certificate in Form 10 CCP along with the return of income had not been filed, but same was filed before final order of assessment was made, the assessee was entitled to claim deduction under Section 80IP. So, see, based on the rationale of the decision, one may say that audit report is mandatory, but filing before due date can be considered as a directive nature.
So anyway, the form has to be submitted.
Fine, better. See, maybe we can litigation perspective. Yes, we can challenge before the court of law, but adversary perspective, I think this is not recommendable. Better to file the Form 10. So same what you said, I written it. Let us move to next question. So let's see the explanation. For the purpose of this section, additional employee cost means total emoluments paid or payable to an additional employees employed during the previous year. So, I have given the explanation 1 and explanation 2. Now let us go to the question. For the new business, whether the emoluments paid to an employee in excess of rupees 25,000 is eligible for reduction. In other words, for the purpose of determining additional employee costs, whether only provision 2 to explanation 1 has to be interpreted, or need to conjointly read provision 2 to explanation 1 and explanation 2. Thereby the condition prescribed in explanation 2 should be taken into account. To add fuel to the above question, in the serial number 5 of the annexure to form 10DA, the term used is an additional employee, both for existing business as well as new business. And further, in case of new business, 30% of emoluments paid are payable to additional employee employed during the first year of business is eligible for deduction. If you see that form, they use the word additional employee. So whether you will be eligible for deduction. I think I communicated my question right. Even though I am not satisfied the condition as prescribed in explanation 2, in case of the new business, whether I can claim deduction. Any thoughts?
Question explain பண்ணுங்க sir. Question என்ன?
Ma'am, if you see that explanation, right?
Which one?
See, explanation 1.
Okay.
Additional employee cost means total emoluments paid are payable to additional employee employed during the previous year.
Okay.
Correct? If you read proviso, second proviso, provided further in the first year of new business, emoluments paid are payable to employee employed during the previous year shall be deemed to be additional employee cost.
Okay.
So see, under subsection 1, 30% of additional employee cost will be allowable as a deduction. What is additional employee cost is defined in proviso 2 to explanation 1, which says that in case of first year of business, emoluments paid are payable to employees. There is no words as additional employees.
All the employees are only additional employees, right?
So my question here is that, see, additional employee cost, what is additional employee cost? I know from reading the proviso 2 to explanation 1, right? If that be the case, should I read explanation 2 also so as to satisfy the condition? So only I will be eligible for deduction.
You have to read it, no? The 25,000 we have to take it into consideration.
So, but if you see that second position says whatever the emoluments paid without any restriction, you will be deemed to be an additional.
No, that is only for the purpose of that explanation, right?
So, see why I need to see additional employee cost? Because in subsection 1 it says that 30% of additional employee cost. Any of that condition has been fulfilled. I mean, I'm getting that amount, right? I'm not agreeing. So view 1 deduction.
Provided further that it shall be deemed to be the additional employee cost. Anyway,
Yes.
They are also talking only about the additional employee, right?
Correct.
Okay, so you cannot extend that proviso to the second explanation, no?
So what are you telling?
So I am saying that 25,000 condition you have to check for both in the case of new business and also the existing business. Yes.
So unless you satisfy the conditions, all those conditions, I mean, whatever it is stated in the explanation 2, you are saying that the taxpayer is not eligible.
You are not eligible.
Tell me, if suppose I have formed a business after maybe August 4, right?
Okay.
Whether I will be, whether I will be able to satisfy 240 days condition?
You're saying for 240 days like that.
Of course, one may also argue that the provision 2 will safeguard that person. I mean, he will be deemed to be employee in the subsequent year. But if you go to explanation 2, right? What you said is that yes, you need to satisfy the condition whatever it is stated in explanation 2 also, right? Just read the opening phase of the explanation 2. Additional employee means employee who was employed during the previous year and whose employment has the effect of increasing the total number of employees employed by the employer as on the last date of the preceding year. Which means you need to compare two things, right? One is the preceding year. Say for example, if it is 21-22, right? I asked to compare 2021, which is not possible for the new business. So now one can say that the condition has to be satisfied.
Okay. Last preceding years is 0, right? Still you can compare that.
Okay, you're telling that 0. Of course, my previous year itself not started. So you're saying you can be compared. Can be compared.
With that standing only, they have given that proviso under explanation 1, no? With that assumption only, they have given that all the employees will be deemed to be additional employees.
I want to
Taken that previous year to be 0 employees. No, now all the employees will be additional employees. So we can take the same assumption here also.
Sir, Vendesh, sir, I'm not hearing anything from you, sir. Sir? Ravi, sir? Good morning, sir.
Hey, good morning, good morning, good morning. Say, hello, can you hear me?
Yeah, sir, I could hear you, sir.
Yeah, okay. Yeah, I'm listening to you. I think it's doing fine. Sorry, I joined a bit late. It's quite interesting. Anyway, I'm listening to you. As such, I don't have any questions now.
So I want to hear from other people also. No one is
speaking up. Okay.
Yeah.
It's a quite hard time here. It's early morning. Yeah. Anyway, I guess it's good to listen to you.
Thank you, sir. So as so both view are possible. So view 1 deduction is allowable. On conjoint reading of subsection 1 and proviso 2 to explanation 1, one may take a view deduction is allowable irrespective of threshold limit set in explanation 2, which is a mistake. As per subsection 1, deduction is allowable an amount equal to 30% of additional employee cost. What is additional employee cost? In case of first year of new business, the amount once paid or payable to employees employed during the previous year shall be deemed to be an additional employee cost. The proviso does not use the expression emoluments paid or payable to additional employee during the previous year in order to refer the definition of explanation 2. Accordingly, the deduction is available to irrespective of salary limit or participation in RPF 240 days condition fulfilled or not. Irrespective of that, one may claim deduction. When the language of the section is plain, clear, and unambiguous, then the literal interpretation has to be given, which we already discussed. Of course, it may not be possible to satisfy the condition of 240 days of employment in the first year by all the new entities set up post 4th August. Law cannot impose an obligation which is not possible to do. The content of the form cannot override the express positions of that, which we already discussed. On literal reading of opening phrase of explanation 2, one may agree that explanation 2 shall not be applicable to new entity, which we already discussed. There is a view to, deduction is not allowable. It may not be intention of the parliament to allow deduction to, white collared employees. Of course, I'm using the white collared employees. There's no way in the section it is used, but because the 25,000 limit for that purpose I used. Those who are not participated in recognized provident fund and satisfy condition which are specifically mentioned, which does not satisfy the condition mentioned in proviso 2. Applying literal interpretation would give absurd result. The condition of 240 days may not be possible to fulfill, but there is no intent to fulfill other condition if the entity is set up post July. The form 10DA has an expression 30% of emoluments paid or payable to additional employees during the first year of the business. Once there is a need to fulfill the condition of explanation 1, 2, and 3 for claiming deduction under 80WJW. So, giving the intent, I don't see as a government would, thought for allowing deduction even if you paid in cash or more than 25,000. If that be the case, even whatever the amount which is paid to the director or other people also will be allowed as a deduction. It may not be an intention of the government. Actually, literally may not be a additional employees as such, because if you see the budget speech as such, I think in the para 67 in the finance in the budget 2016, actually they want to encourage employment from unskilled or semi-skilled people. They need to recruit more people. Only for that purpose, they have enlarged this provision. So one may, after seeing the budget speech as such, can take a view that the deduction is not allowable. And since this is a conservative view, better it has to be taken. Of course, view one is aggressive view. Maybe we can challenge it, but from the advisory perspective, I would suggest to take view 2. Deduction is not allowable. So, question number 12. In case of existing business, for the purpose of determining eligibility as per provision 1 to explanation 1, whether all the employees recruited during the year are to be considered, or only the employees recruited and satisfying the condition as mentioned in explanation 2 are to be considered. In other words, whether an employee who does not satisfy the other condition as set out in explanation 2, for example, who is earning more than 25,000 per month, would be considered for the purpose of computing net increase in employees. See, in the part 1 of the discussion, we have seen that the table, right, where how the closing balance has to be arrived, opening balance, addition during the year, and who has been left during the year. And after deducting that, you have to compute the closing balance. If there is net increase as such, you will be, the taxpayer will be eligible for a deduction subject to other condition. Now the question is that whether this addition during the year, which is mentioned in the A2 or B2, should those employees satisfy, additional employee condition, or even if he is not satisfying additional employee condition, still it has been included. It can be included. What is your view? Of course, I mentioned a note in this question. Forget about the impact of second question to explanation 2, which we'll discuss next. Next case study. I think I communicated the question. Meenakshi ma'am?
Yes, I think.
Is the question is clear?
I'm just. Can you come again, but?
Ma'am, if you see the table which we discussed in the part 1 of the chapter,
Yes.
in the discussion, so we have to compute net addition of employees, right?
You're saying for the purpose of determining eligibility as per proviso 1, right?
Proviso 1, correct.
Proviso
in case
1.
of existing business. See, if there is no increase in number of employees from the total number of employees employed on the last date of preceding year, right? Then the additional employee cost shall be a nil. So now the question is that for the computing eligibility as per the provision 1 to explanation 1, whether the addition should be included only the eligible employees or even the non-eligible employees shall also be included.
The number of employees. Even if they're eligible, only if the additional employee is there, we will be able to claim the reduction, no? What is the purpose? If suppose there is an increase in the employee who does not satisfy the conditions.
So you are telling that even
if suppose I'm employing, I have an increase in the number of employees, but none of them satisfy the conditions. So I don't have any purpose for 80WJW, right?
So what you are telling is that only the additional employee who is satisfying in the subsection, explanation 2 shall be included, correct? So read proviso 1 class A.
Yeah, that is what, there is no increase in the number of, it is not mentioned there, I understand. Okay, it only talks about all the employees, right? But still, what is the purpose of that? I'm going to claim only for the eligible, that additional employees, no?
Hello? Hello?
Yeah, you're able to hear me?
Yeah. I'm hearing.
No, I understand the proviso A does not talk about the additional employees. It only talks about all the employees. That is right.
So, any other thoughts?
Okay, but still the section is only for the additional employees, no?
So what you're saying that only the additional employees?
Only if there is an increase in the additional employee, then the section has a role to play.
Say, let us go to that part one of. Ma'am, could you see part one
Part
of?
no, this is part 2.
Part 2. Just I'm sharing that part. See, I'm computing the net increase, right?
Okay.
And computing the net increase out of B2, right? Sorry, out of A2. I determine who are the eligible employees. I'm finding that one. Then what are the emoluments I'm paid? The deduction is, available for the taxpayer. So it seems it's nothing to do with the table 2, right?
Yeah, it has not. No. Yes, it has nothing to do with table 2. Yes, right.
So now your answer changes.
No. How does it going to make a difference? That I didn't.
So what I'm saying
understand.
That I'm taking the total addition during the year, correct? Out of which who are eligible, only for those employees, whatever the payment which I made, I'm computing 30% reduction. Correct or not?
No, that is only for the eligible additional employees.
Only if, yes, that's the intention, right?
That is what I have been saying, no?
So see what I'm saying. My question is that out of year 2, will take in the list of employees who satisfy this condition. Correct?
Yes.
You are telling that even here the only eligible employee should be included.
No, but what is a okay, I take the view. Okay, we can take all the employees, but I don't understand how does it going to make a difference in your done in incentive calculation.
Definitely will make a difference.
It will make a difference.
Yes.
Can you explain with an example?
So any other view?
எனக்கு புரியல சதீஷ் நீங்க என்ன சொல்றீங்க என்ன actually.
So ஒண்ணும் இல்ல மேம், அந்த ஏற்கனவே நான் சொன்ன क्वेश्चन தான். இதுல வந்து எலிஜிபிள் எம்ப்ளாயிஸ் இன்க்ளூட்
இல்ல எனக்கு இந்த இதுல நீங்க எல்லாரையுமே இன்க்ளூட் பண்ணிக்கலாம், அது ஓகே. பட் ஆனா அதனால நமக்கு என்ன டிஃபரன்ஸ் வர போகுதுன்னு எனக்கு தெரியல.
கண்டிப்பா டிஃபரன்ஸ்.
Okay, then you got to explain. எனக்கு
Let us first discuss the answer, then we'll go to this. Literal reading of view 1, view 1, all the employees are to be considered. Literal reading of class A to proviso 1, there is no condition as such.
Yes.
Only the employees recruited and who satisfy the condition of additional employees as mentioned in explanation 2 are to be considered for determining the eligibility. Once one cannot add the condition which is not contemplated based on the literal reading of the section.
Yes.
There is, so I given the phrase, there is no increase in the number of employees from the total number of employees employed on the last date of preceding year. Since the section has used a different phrase and different places, same interpretation cannot be given for the different phrases used. This is a one view where all the employees are to be considered. only those employees who satisfy the condition are to be considered. Okay. So, see, one of the way interpreting the section is that, right? So we have read this interpretation of statistic, right? Correct. There is external aid of discussion, interpretation or internal aid of construction. We have read it. So actually, what is provision talks about? Provision generally talks about the exception.
Okay.
No, generally I'm discussing. Generally, if there is a main provision, right? If any provision is placed before that, right? So the provision will restrict the main provision for a particular, particular assessee, or maybe there this which will be the exception to the main provision. Would you agree?
Yes.
So say for example, it's an explanation. Explanation generally will elaborate the main provision, but provision will restrict the main provision. So if you take that into a consideration, since the provision is placed below additional employee cost, correct? One may read, right? Even though they use the word term employee, one can read as an additional employee.
Additional employee, yeah. This is like satisfying for me.
One view. So your question is that how will it?
How view 1 and view 2 is how does it going to make a difference in the amount?
Say example, if there is opening balance 100, correct? Say
number of employees
100. Just I'm thinking how it will change.
Okay.
If there is an additional employee who's eligible, say 50, 150 during the year, right? Now I'm reducing maybe ineligible employees, which may be from the opening balance.
Okay.
Correct. So
which is 70. Okay.
Maybe.
Okay, I got it. If suppose it is more than 50 addition, then there is no net increase in the number of employees you are saying.
Could be there possible.
Okay.
Can you explain your what you understand?
Yeah. See, what I understood is, that you said opening is 100. Additional employees who are eligible is 50. So total comes to 150. There is an increase. But then I have to reduce the employees who are going out.
Correct.
Okay. In case all those are ineligible employees. Okay. If that number is 70. So now my number comes to 80.
80, correct.
So there is no net increase.
Now, if you consider even ineligible employees, maybe the additional employees, eligible employees, maybe I would have recruited another 30 to satisfy the condition. Correct?
So in this condition, I will not be able to claim for those 50, you're saying?
Yes. If you adopt that approach,
Okay. Oh, but that is actually the plain reading will convey, no? But your view 2 is only interpretation.
Yes.
So view 1 is actually the advisory.
Better view, yes, better.
Yes. Okay. Got it, sir.
So actually, one has to understand this question much, because the answer is I have given 1 page, but the question runs to 3 or 4 pages. So actually, it has to be one has to understand, because each alternative have a different answer. So where the new employee recruited does not satisfy the condition of 240 days in the first year, but fulfilled in second year, how such employee would be considered for the purpose of net increase in employee for first provision to explanation 1.
New employee recruited does not satisfy the condition of 240 days in first year. Okay. They will not.
Right?
They will
second. Not. Why? So you are telling that in the net addition or increase in employees will not be considered.
They will not be. Yeah, for the next year calculation, they will not be the Additional
So
employee.
can you explain why you are saying that it will not be based on the provision?
It is only like as on the last day of the preceding. It is only compared to the last day of the preceding year. So they would have become the employees of the preceding year.
Ma'am, this is the existing business. Okay, I recruited a particular employee. Correct. He has not satisfied the 240 days condition, but still he is in the payroll. Correct. In the subsequent year, he has completed 240 days. Even the subsequent year, he is in the payroll. My question is that whether such employee will be treated as additional
employee for that year.
Not for additional employee as such. I mean, not in that. For the purpose of first provision, 2 explanation 1, correct? That addition which you are making, right? Whether that person will be included. Why I am asking this question, right? If we come to a proviso 2 to explanation 2.
Proviso 2 to explanation 2.
2. Provided further that where an employee is employed during the previous year for a period less than 240 days or 150 days as the case may be. That is for the specific industry.
Okay.
But is employed for a period of 240 days or 150 days as the case may be in the immediately succeeding year, he shall be deemed to have been employed in the succeeding year, and the provision of this section shall apply accordingly. It does not say that provision of this subsection. It says provision of this section shall apply accordingly. Which means he will be deemed to be an employee in the subsequent year.
Okay. So even for the purpose of explanation 1 proviso A, we can apply this.
Please don't conclude. Let us complete my question.
Okay.
Whether the deemed fiction should be restricted for the computation of additional employee cost, or it has to be extended for determining eligibility also. So what I'm saying is that whether the proviso which is placed below explanation 2 will qualify only the explanation 2 or even the explanation 1 also, or whether that what are that meaning has to be extended to that also. I am given in the form of computation, right? The calculation for the purpose of proviso 1, right? Alternative 1 without considering proviso 2 to explanation 2. Alternative 2 considering proviso 2 explanation 2. Right? So what? Assume the opening number of employees 100. Okay. The addition during the year, I'm splitting into 3. Employee who has been completed 240 days in the first year itself. Say for example, I have employed in the year 1. Okay. But he completed 50 days. And employees who has completed 240 days in the subsequent year, not in the current year. Right. So what I'm saying is that in the alternative 1, even though I'm included, which means I'm not considering proviso 2 into the effect. So I'm including here for the purpose of determining the net eligibility. And third, the employee who do not complete 240 days in the both the year. Say for example, I recruited here in this year, he has not completed 240 days in the current year. In the next year, he left before completing 240 days.
Okay.
So I'm including that person also. The total addition is 150. Less total number of employees left during the year. I'm assuming 120. Correct? So the net increase in employee is 30 because 150 minus 120 it comes to 30. Correct? The closing number of employees is 130 because 100 plus net increase 30 comes to 130.
Okay.
So number of employees eligible for deduction 30. I'm coming to this part, how whether the deduction has to be restricted to net eligible employees or not. We'll come to in the subsequent case. So what I'm telling that even though there is a 50 employees who's eligible, right? I would have restricted my deduction to 30. This part I will come. 130, this closing employees, I'm taking to 130 here. In that, maybe in the second year, I employ 30 days, 30 employee who has completed 240 days. The employees who has been recruited, in the current year, but not satisfied 240 days condition. So say for example, that employs 20 employees. And employees who does not complete 240 days in the both the year, maybe in the current year and the subsequent year. Say for example that number of employees comes to 20. So total addition is 100. Now I'm reducing total number of employees left during the year. Number of employees left during
40,
the
30,
year
70, right?
60.
Yeah, 20. Oh, second year addition.
Second year addition. So 100 minus 60 comes to 40. So the closing employees comes to 170. 130 plus net addition 40, 170. Correct?
Net addition is no. Go back.
100 minus 60, ma'am, net addition.
No, net
That comes to
addition.
40.
Okay, maybe you can take it to 100 because 30, 20, 20, right? 70.
So 170. This is okay, right?
No, that number is wrong. I'm just saying that.
Where, ma'am?
Yeah. 30 plus 20 plus 20. That is what you're saying, no? It is only 70.
Oh, okay.
Okay. So maybe you can increase this number. Okay. Suppose we consider this employee who don't complete 240 in both the years.
Wait, ma'am. It's just better. Change it. So what are you saying? 30. So 30.
20 and 50 you can put.
70, right?
No, you can increase that in who don't. Who are not.
30, 50, 70, right? 70 minus 60 comes to 10, right? Correct. So 10 plus 130 plus 10 comes to 140. So even though 40, I will be eligible for deduction 50 plus 30, 70. But my net addition is 10. Anyway, 10 only I will be eligible for deduction only for 10 members. So okay. So 130 opening balance.
You can have to share.
Addition during the years.
You have to share the screen.
I'm just. Is this part 1 or?
No, you are not.
Yeah. Is this?
Yeah. Right.
Okay. So 130. The addition during the year is 70. In the second year, out of 70, I'm reducing 60. Right? So the net addition is 10.
Okay.
So total 140.
140. Okay.
So since the net addition is 10, I will be eligible for 10 employees.
Okay.
So totally I will be eligible for 40 employees for the first year.
For the?
Even though for the 2 years, 40 employees, I will be eligible for 40 employees. Okay. Correct? If we go to second year as such, say for example, you applying the procedure to explanation 1. Correct? Because it has been deemed to be employed in the subsequent year. Same 100 opening balance, 50 current year eligible employees, and since the employees has been employed during the year,
this 40 are taking it to year 2.
So I am taking into the year 2.
Yeah, got it. 70. No, it is right. This is right. No.
Oh, just a minute.
You have made it. You have made it in the first one. 30 plus 40 is clear.
Wait, just 150. This 40 I am not considering here.
No, here considered in year 2. That is right.
Right.
Okay.
Okay.
Yeah, that is right.
So 50 0 because I will be considered here.
Yeah.
And total the other employees 60, so comes to 110. And out of this 120 members employees has left out, so
nothing I can
comes to negative. I will not be eligible for deduction.
Okay.
I'm taking 90. Correct? He will be deemed to be employee in the current year. He was satisfied 240 days, so 30 plus 40, 70 because current year is 30 plus 40.
Yeah.
Correct? Okay. And anyhow, I will not take 20 because it will be considered in the next year. 10, 50 comes to 120. So 120 out of which 60 employees left during the year is 60. So 60 plus 90 comes to 150.
Okay.
Correct? Even though 70 members are eligible, employees are eligible,
I can claim for
since
60.
net addition is 60, I can claim the deduction only for 60 members. Correct?
This one is good.
So here my deduction as such is changing, because if you not considered, proviso 2 to based on the explanation 1 to proviso 1 to explanation 1, correct? My net eligibility is getting changed.
Yes.
In the first case, 40 members only eligible, in the second case, 60 members are eligible.
Yes.
Correct?
Yes.
So which is the better view?
Alternate 2. Then that is what I have been telling even before you give me this example. You have to consider that explanation too, because it says it applies to the section.
So I'll tell you the problem. Yeah. So in the issues in alternative 2, while filing the return of income for the first year, okay, how one would know whether the employee is recruited in year 1 will complete 240 days in a year 2 or not? This
But
is
still, you have
necessary.
not completed the 240 days, no? Why should we consider?
Wait. I'm saying that I'm raising the practical issue. This is necessary because one has to exclude such employee, correct, from year 1 for computing eligibility.
Yes.
Correct?
Yes.
So the due tax audit report has to be filed. Form 10D has to be filed before 30th September. ITR due date is 31st October. The 240 days condition will be fulfilled only on the 26th November 2022. Correct? If, for example, I am computing, deduction for the financial year 21-22, right? How, as on this date, I will be, while finding the original return of income, how I will know?
No, we are only considering that employee for year 2, right? Year 2, you will be knowing.
Ma'am, if you go to the alternative 2, correct? Alternative 2.
You are only talking about this 40 employees, no?
So, yes, 40 employees.
Correct? 40 employee, you will know for sure in the year 2, right?
Year 2 on which date? See, in the 40 employees, I am not considering year, right? In the alternative 2.
Here you need not consider, but then in the second year you will know whether you are not going to consider for the year 1. So
my question is in the year 1, which is for example, this is a financial year 21-22. Take this year 1 as a 21-22. As on this date, whether I will know the employees who's recruited in 21-22, correct? Whether you will complete 240 days as on this date, will I know?
You will not know.
That's a problem. So I need to find the return of income now.
No, you are not going to consider them. No, you are only going to consider them in the next year, right?
And if you see here, the employee who does not complete 240 days in both the years I'm considering here, in the same year itself.
Okay.
Right? If that be the case, so the particular employee,
well, that should not be done then.
Whether he will be completed 240 days or not, how I will know as on this date before filing a due date of, original return of income? Is it possible?
The problem is with the third case, right? The problem is with the third case, not the second one, who left it before 240 days.
Correct, ma'am. Suppose if he is not satisfying 240 days in both the year, I would consider in the first year itself. No? See, after filing the return of income, only
that risk is there. That risk is there.
So that risk, yeah. So there is a further, problem there. So see, actually earlier we have revised the tax audit report, right? So this, which is based on, I think, say 520 or something like. Based on our auditing standard. Deepa ma'am is there? Maybe she can add it. But there is an express provision in the income tax rule when you can revise the audit report. There are certain conditions, and also there is some due date which is given. Read Rule 6G. The report of audit furnished under this rule may be revised by the person by getting revised report of audit from an accountant duly signed and verified by such accountant and furnish it before the end of the relevant year for which report pertains. If there is a payment by such person after furnishing of report under subrule 1 or and subrule 2, which necessitates recalculation of disallowance under section 40 or 43.
Okay.
So can I revise the report? Take that, of course. What I'm saying is that
You cannot. You cannot.
Client takes a position to revise the return of income.
No.
As an auditor, can I revise the report?
No. Your option is only section 40 or 43B.
So there's a problem. So anyhow, as usual, I have given alter view1 and view2. The intention of the government is to provide a fiscal incentives to the employees who are generating additional employment. However, it may not be possible to fulfill the condition of 240 days in respect of all employees recruited in year 1. Accordingly, the provision was inserted to relieve difficulty of non-availment of benefit in the first year, and the same can be claimed as a deduction in the second year on satisfaction of 240 days condition in year 2. The provision which brought to relax the taxpayer cannot be applied prejudice to him. So actually, this explanation 2, which is brought by the, provision 2 has been brought by the Finance Act 2018 just to relax the taxpayer, because earlier there is no such kind of provision. So if that be there is also interpretation that only if that particular employee is employed before August 4, then only he will be eligible for a deduction. To read a literal interpretation. Okay. So just to avoid that, that interpretation, the government has came up with this kind of, to relax.
It was inserted later.
Inserted this one. Okay. But ultimately, this also maybe there is difficulty for complying with the provision. The provision should be assigned in such a manner as would enable the assessee to secure the benefit intended to given by the legislation to the assessee. Alternative 2, literal reading of provision 2 support this position because he shall be deemed to have been employed in the succeeding year and the provision of this section shall not apply accordingly. Difficulty cannot be equated to the impossibility. So you cannot impose doctrine of impossibility of performance principle in this and say that I am not complying. No. There is a difficulty in performance, of course, complying it, but still you need to comply it. So as you said, the alternative 2 is the better. Check. Now the question comes that, say for example, I recruited a particular employee, right? He has completed 240 days. Whether he should be in the payroll on the last date of previous year for the purpose of claiming deduction. Read the opening paragraph of explanation 2. Right? Additional employee means employee who has been employed during the previous year and whose employment has an effect of increasing the total number of employee employed by the employer as on the last date of the preceding year, but does not include. It goes this way. Okay. Please note that there is a particular day. See, for a comparison, there should be 2 things, correct? Or 2 point of time. One, there is a last date of preceding year. Correct?
Yes.
What did I need to compare? See, opening balance they have given, which is the maybe take for example 31st. If I am computing deduction for the financial year 21-22, correct? Last date of the preceding year is 31st March 2021. Correct? For the closing balance, should I take 31st March 2022 or some different date? Because it's not expressly stated in the explanation 2. Hope you understand, right? Let me give the hypothetical example. Say opening number of employees is 100. Up to 31st July 2021, okay, 50 number has been added. Okay, out of which 50 employee satisfies all the conditions.
Okay.
35 employees does not satisfy the conditions.
Okay.
Right? So up to 31st March 2021, no employees is left out. On 31st March 2021, totally 35 employees has been left out. Okay. Out of in this 35 will comprise of 10 employees who has been recruited during the year.
Okay.
Which means these employees already satisfies the 240 days condition. So the net addition is 15. Correct? Net addition is 15. But if you actually see, only the 5 employees who was recruited in the year is in the closing balance, in the net addition. My question is that only 5 employees is eligible for deduction, or
can you go back to that provision? Can you go back to the previous slide? And there is nothing here which says that he should continue in employment, right?
See, additional employee means employee who was employed during the previous year and whose employment has an effect of
it has the effect of increasing the total number.
Yeah.
Where it is said that he has to continue in employment.
You are telling that even if he is not in the payroll, he will be eligible for reduction.
Is there anything here which says that he should continue in the payroll on the last day?
See, there is no express provision. What is your interpretation?
So he has been employed for more than 240 days.
Yes.
Yes, then it has the effect on it, and it has the effect of increasing the total number of employees.
So
yes,
see that wait. See the 35 employees. Say for the moment I'm assuming that the government return was to compare with I mean, actually here also there is a mistake in the question. This should be 31st March 2022. So
for me it is like,
see, read the provision, section provision. Additional employee means employee who has been employed during the previous year and whose employment has the effect of increasing the total number of employees employed by the employer as on the last date of previous year. There is an increase in number of employees because of his employment. Because of his employment, there should be an increase in employee.
There is no.
No, my question: who's? See, I'm comparing as on 31st. Say year preceding year. I'm comparing which date, which section has clearly told. I'm assuming the 31st March 2022 as of now, right? If I compare whether there is an effort of increasing employee for that particular employee, because he's already a see, there is an increase in employee, but this recruitment or that 10 employee who has been left has the effect of increasing in employee. Any thought?
Yeah, it's confusing.
So what I'm saying, view 1, emoluments paid to 5 employees are eligible for deduction. View 2, no emoluments paid to 15 employees are eligible for deduction as a view 2. View 1, I'm saying that the object of the provision is to create employment of opportunities for the semi-skilled and unskilled workers, which means not more than 25,000 emoluments condition. And so actually if you see the budget speech, right? So the employment, one may, take a view that, reading the 25,000 condition, the government intention was to increase the employment opportunities for the semi-skilled or unskilled employees, which is not fulfilled in an instant case. Accordingly, no deduction is allowable for the eligible for those eligible employees who is not in the payroll as on the last date of the previous year. So this is nothing but the case laws related to strict interpretation I mentioned here. For comparison, 2 point of time is required. One is the last date of preceding years, and the other section is silent on this point. Once it is logical to compare with the last date of previous year, any other interpretation would lead an absurd result, because there would be uncertainty in approach among the taxpayers. Law should be equal or treated equal to all the taxpayers. I think this is what I said is, explanatory. So what I'm saying is that the intention is to create an additional employment for the semi-skilled or unskilled employees. That condition literally is not fulfilled because he's already left during the year. So one may take an argument that
still he has served for 240 days. Even that can be considered as you have contributed to the employment.
See, literally, I think it's literally is an additional employee.
You can't take. There is no number of days fixed. Okay, only the number fixed is 240 days. That is satisfied, no?
Any of the other view, as I said, is also possible once the employee falls within the exemption class. So, as mentioned in the provisional 2 expansion 1, full effect of the benefit should be given. So, if you read that, one of the proposition which I mentioned earlier is that there could be a strict interpretation on the one side and the literal interpretation on the other side. Correct? Once if the taxpayer becomes eligible based on the condition given in the provision, then the effect has to be given in such a way that you will be enjoying full benefits. There is no express condition to be in the payroll at the end of the year in order to claim deduction under the Act. So far as 15 employees satisfies all the conditions as mentioned in the Act, the employee is eligible for deduction. So both views
both views
possible,
case law.
But see, there is no direct case law. The problem we are discussing this much is that there is no direct precedent as such. We are somewhere picking on various case law. All those are from customs and that laws. So, so this is a problem. This section. So conservative views, only 5 employees are eligible for deduction. Aggressive views 15 employees. But I would